What is up, Tycoons? Super excited for today's video. We're going to be looking at Selfkey, okay, ticker symbol KEY. What we're going to do in this video is we're going to go over the major fib retracement levels, specifically the 61.8, the 50%, the 38.2. We're going to go over the MACD, how you can look at this and spot some potential exit signals, right? And then we're also going to take a look at our relative strength index down here. And you can combine all three of these things together to really give yourself a competitive edge in the battlefield that is known as cryptocurrency, okay? Remember, trading is like going to battle, it's like going to war. You need to have the proper weapons at your disposal and as many weapons as possible to really give yourself that competitive edge. Now, once you're able to combine some of these weapons together and get 2 or 3 indicators aligning with each other, you're going to have much more confidence in your execution, and it's really going to help your success rate out. Now, none of this is financial advice, but I'm going to break down how these strategies work. So all I need you guys to do is smash the like button, subscribe to the channel, and we'll get straight to it. Okay, first off, we're going to look at the fib retracement tool. So what we're doing here is we're using this to figure out our 3 major retracement levels. Okay, the 38.2, the 50%, and the 61.8 are well respected in cryptocurrency, in the stock market, and the Fibonacci golden ratio exists all throughout nature itself. Okay, so it's very prevalent. About 70% of trading is done by algorithms, whether you believe it or not. So, it's really good to start using some math formulas and use some of the tools that they're using as well to, try to think like an algo and trade like an algo. So in our first case, we're connecting this swing high, okay, down to this swing low. As we see, we have a huge drop to the downside. What we're going to do is we're going to see, are we going to get a reversal or are we going to get a healthy retracement and then a trend continuation, right? Now, in this case, we come down, all right, and look at exactly where we retrace to. Okay, this thing wicks all the way up to the 61.8% retracement level, and ultimately we continue the downtrend, right? So, we have the sharp move to the downside, we have a healthy retracement, and then boom, we come down and we head lower. Okay, that's one example, all right, of just, the downtrend, right? It's no secret that the entire crypto market has pretty much been in a downtrend this crypto winter and this bear market. So, it's really good to have this tool at your disposal. So that way you can tell, all right, hey, is this just a healthy retracement or are we actually getting a reversal? We're going to look again and we're connecting our swing high down to our swing low. We see we come down, we retrace, right? We get right around the 50% level this time. And, ultimately we get rejected here at the 38.2 and then continue heading down lower. So we're going to take a look at the recent price action here in a second and go over the major retracement levels and what to watch for. But now I want you to take a look at our MACD right down here. Okay, so a sell signal on the MACD, we'll go ahead and zoom in on this a little bit so you can see it a little more clear, is going to be when this blue line here crosses below the orange line, right? So we'll see it's trading above and then it crosses below, right? So what that does is that's going to be your exit signal, okay? And we come here and we can take our measuring tool and look at when we got the candle where we got that. We got that on this candle and it dropped 35% afterwards, okay? So that's, indicated a sharp drop. Now the MACD is a lagging indicator, so it's going to be a little bit slower and a little bit behind some of the other things, okay? You have to keep that in mind, that it definitely is a little bit lagging. So, what we did was we're using our 2 tools so far, right? We're using the retracement level. We see we got a clean rejection here, all right? This is a time where you can go short, okay? You can look to go short, or if you were able to ride some of this momentum to the upside, this is a time where you would say, hey, it's time for me to throw some protection on my trade, some type of risk management. And then you get your confirmation shortly after, right? With that lagging indicator, you get your confirmation here, and then boom, we have a big sharp drop. Now, price action is always going to precede news. I want you guys to remember that. And so, we saw the rejections happening here, and then this is right around the whole FTX collapse and the collapse of the FTT token, which hurt the entire market. So, of course, there's 2 big red candles that day. There's no surprise there, but the price action always precedes the news. We can go over here and we can take a look again. And here's our previous MACD sell signal. All right. And that one led to a very sharp drop as well. We get our sell signal right here and we end up dropping 25%. Okay. Over here, I didn't draw it on here, but ultimately, we do get another MACD sell signal right here as well. Okay, and this thing drops 25% again. Um, Now we've gone over two things that we're using so far, the fibs and the MACD. Now, the next thing we're going to look at is going to be our relative strength index. Okay. And this measures the relative strength of a token at its given price. And you can use this for entries and exits as well, meaning that typically you never want to buy something when it is overbought. So what is overbought? Overbought is going to be this level down here. All right, it's going to be 70 on the relative strength index, and it's indicated by this dotted line. When you're at overbought levels, it's typically not a good time to buy into something, right? And when you're here at oversold levels, it's typically not a good time to sell something, right? So you could use this as entries and exit signals, okay? And if we take a look, right, we're oversold right here at this area. We can take our measuring tool and just see real quick. All right, if we would have said, hey, relative strength is really low, it's super oversold. We're all the way down here at 20, and you take a position in here and ended up rallying over 75%, ultimately about 124%. But this was a real crazy wick right here, okay? And then, right here, we're overbought and we get a MACD sell signal. Okay, so now we're combining things together again, right? And that's one of the things you really want to do to give yourself some more confidence. So we're saying, hey, we're at overbought levels here. I definitely wouldn't buy here. And then we get the MACD sell signal right in through here. And you see we have a very large drop to the downside. Over here, we're seeing the same thing again, right? We're getting our relative strength index is saying, hey, this is overbought right now. So that's, you, like I said, you typically do not want to buy something when it's overbought. Now, just because something's overbought doesn't mean it can't go higher. And just because something's oversold doesn't mean it can't go lower. But this is, some things that can really help you out in your journey. Okay, is looking at the relative strength index, looking at the MACD, saying, hey, are we really overbought right now? Maybe I don't want to go long here. All right. And hey, we're really oversold here. Maybe there's a chance that we could get a slight recovery. And if we take a look again at the recent price action, what we're seeing is that we were super oversold, right? Off of the FTT collapse and the FTX collapse, and we're starting to recover. Now, we really need to pay attention. Are we going to be able to break past our major retracement levels, right? So currently, the levels that we're looking at is 003777, 003998, and 004218. If we're able to break past these levels, right, then we have the chance of a possible reversal. But otherwise, we're going to be doing a downtrend with a healthy retracement to continue the downtrend. Okay. So, that's the main things we have to look for, right? So I'd be very cautious trying to go long in between these levels because there's a strong chance that these are, going to be the major rejection levels where we're going to come down, get rejected, and then continue this downtrend. Now, if we are able to break past them, okay, then that would be our possible reversal. And again, we'd be looking to see if we could really take out this high up here, right at about 0.004948. If we're able to do that, then we have the possibility of, creating a new trend instead of a downtrend, right? Because the main thing that we've been doing, okay, is we've been making lower highs, right? So we have a high here, we have a lower high here, we have a lower high here. If we're able to come up here and make a higher high and then take out this high and make a higher high, then we have the possibility of making, a new trend, as I said, right, where we're creating higher highs and higher lows. All right, because if we take a look here, we already have our low, we have a higher low, we have a higher low, and so we're seeing we're zigzagging, in this upward direction. And we really just need to be cautious of the 61.8, the 50%, and the 38.2 retracement levels. And that's about it for today's video. Okay. So if you learned something new, smash the like button, subscribe to the channel. I do viewer requests every week too. So if you want to see your video in the next, or your ticker symbol in the next video, all you have to do is comment down below, and I'll be happy to do a video on it for you as soon as I can.